everyone. I'm gonna try this again. Wait for some people to get on. Just wait for some people to get on. Facebook has changed so much on these groups and so much stuff you can or can't do. But anyway, so basically, what I wanted to get on here and talk about, I want to go over um, taxes and underpaying of taxes in that form and all of that. I did a video. I did a Zoom video of walking you through filling out that W-4 form step by step and giving you some information on that. I'm going to post the video in the group as soon as I'm done with this live. I just wanted to go over a few other things. I wanted to do it all at one time, go over it and do the live at the same time, but Facebook wouldn't let me be great, so I had to improvise. So once this is over, I will post the Zoom link. And the good thing about the Zoom is that you can save it and go back to it anytime. I'm gonna keep the recording active for as long as it'll allow it to be, and I will leave it in the group for ever. I'll even post it to the featured tab. So whoever misses it or can't see it today, they can go back and see it whenever. So first off, how is everyone doing? I hope everyone is doing okay. Um, so basically, they have changed the W-4 form again, even after the changes that they made. And the only thing is they have removed the actual line that says to go exempt. They have removed it, but you can still go exempt. You just have to write it underline 4C that that's what you're doing. So if exempt is something that you're doing, which I don't suggest, but hey, teach his own. If exempt is something that you're wanting to do, you will fill out the form with your name, address, and stuff at the top. You will leave the middle part blank. You will go underline 4C, which is the last line on there. Under 4C, you would just write exempt. You will go to the bottom of it, sign and date it, and submit it to your HR department. So that's the change. They have just removed it off of there, but you can still go exempt by just listing it on the form. So a few of the things that I wanted to tell you about is a lot of clients that I get, at the end of the year, they're a little some are upset because they feel like they should have gotten more, or that's they got kids, so they felt like they should have got more money or whatever. And I can't stress enough how taxes are just not like they used to be. They're not like that anymore. The main thing that gets people in trouble is that W-4 form. So you have to keep in mind, regardless of how many kids you have now, if you make a lot of money, that just doesn't really mean much. I mean, you will get deductible credits for having kids if you make a lot of money, but you might not get refundable credits. So the difference in a deductible credit and a refundable credit is, in a deductible credit, you just get like a credit, like you get your tax liability lowered, which means it just says that instead of you having to pay out $2,000 in taxes, because you have kids, you only have to pay $1,000 in taxes, and that's just calculated into the numbers. With a refundable credit, you get it back in a refund in money. So keep that in mind, that it doesn't matter how many kids or whatever. If you make over a certain amount of money, which that amount gets lower and lower and lower each year. For instance, if you have one child, they don't want you to make over, I think it's $33,000. Anything over $33,000 with one child, it starts deducting from your earned income credit. Now you'll still get child tax credit, you'll still get that, but you won't necessarily get the full amount of earned income credit. Now, if you have a business that is a LLC or a sole prop business that you're filing with your W-2 job, then those taxes are a little lower. They're lowered based off of the deductions from the business. However, you still have to be able to prove the business income and the expenses for that business. So you can't just say, oh, well, I made a lot of money, so I'm going to just say I did this for a business to reduce some of those taxes. They're watching that now. And I cannot stress that enough. If you do a business, that's fine. Keep up with the income and expenses. Be able to show where you made this amount of money, you spent this amount of money. It's simple. Keep you a log. If you want to, if you're trying to file your mileage, keep you a mileage log. Keep your Mile IQ app. There's so many apps and logs and all of that because the IRS are asking for these things. And so many people tell me, well, I carried those kids for 4 years. They don't care. Let me get y'all to understand something. When you file kids from year to year, each year is different. The IRS never goes back and say, oh, well, they got a history of filing these kids, so it must be okay. They don't. Chances are somebody totally different is processing the return that processed it last year. Most definitely that's the case. They don't go back and see what happened the previous year to compare it to this year. Actually, that's one of the IRS rules. We cannot use any information from last year to process a this year return. So each year is its own year. Each year, you're just starting over. Meaning, you can get audited in 2020 and not get audited in 2021. You can get audited in 2020, 2021, 2022. It doesn't matter. It's all random. Just because you filed a kid for 10 years doesn't mean that they're going to, on the 11th year, they're not going to audit you and ask you for the information. Because guess what? They're not going to look back on those 10 years to see that you filed those kids. They don't care. Even if they do, they don't care. They want you to prove it for this year. So keep that in mind. It doesn't matter how many years you've carried a kid in the past. If they want to audit you, they want you to prove it for this year. They might go back and say, okay, we also want you to prove it for last year too. But for the most part, we need you to prove it for this tax year. Show us in this tax year where you took care of this kid. And so when you're getting audited, that's why I suggest you get the audit protection when you're getting your taxes filed. $50 and the audit protection team will take care of it. Because when you don't get that and then you come later and, oh, Mr. Beck, I got this letter and they asking for this, that, and the other. That audit protection, if you didn't get it when you filed your taxes, then that's a whole separate service. And if you want me to help you with it, that's a whole separate fee. Because it's very time consuming. You have to gather documents, you have to whatever. Let them take that $50 out of your return to get audit protection. It's just like car insurance. You know what I'm saying? You may not never need it, but when you do need it, you have it. So with that, when you're getting audited, and they're asking you for information, so many people say, well, let me get the birth certificate and let me get the social security card. The birth certificate and the social security card does two things. One, it tells the IRS the baby's name and social. Two, it tells the IRS the parents of the baby, when they were born and where. That doesn't prove anything but that they're related to you. That's just one of the parts of the audit that they need for you to prove. You still have to prove where you provided support for that child for over 6 months. You still have to show where you provided support, where that child lived, if where the child lived is where you lived and you provided you paid over 50% of the bills in that household. You paid over 50% to support that child. There's a case where I had this past year where mama and daddy, and let me tell y'all something, parents, moms especially, let me just tell you, these dads, they're getting very educated and very not educated as to where they were not educated. That's not what I'm saying. But they're getting educated on the tax laws and what's required to be a custodial parent and non-custodial parent. What's required to file the kids or so forth. So if you share custody with another parent, with your child's father or whatever, y'all might want to come to a understanding on, we'll take turns, or I'll file them and give you this, or you file them and give me this. Because I've had that happen this past year. Dad says, look, I pay child support, the children live with me 7 months of the year, and I pay medical, I provide daycare, I do this, I do that. In the eyes of the IRS, if he were to choose to file those kids, which he did, that is who is going to be get the earned income credit. Because once you do the tiebreaker and say, well, where did they live the most? They lived with him 7 months of the year. He paid over 50% of their care, their support. He could prove it. He paid medical. He paid daycare. They were going to the mom's house on weekends. They were going 1 day a week, but she was listed as the custodial parent, but he provided them more support. So when they tried to file taxes, mom says, well, I'm filing them because I always file them. Oh, well, they my kids, blah, blah, blah. Dad says, oh, well, no, because dad now had somebody that's telling him this is what the IRS requires. And let me just tell y'all, if you are both my clients and you ask me, I'm going to tell you the truth. I'm not going to lie to one to save face with I'm not going to do that. I'm going to tell you the truth. What you do with it is your decision, but I'm going to tell you the truth. So dad said, well, I'm filing them too. Mom says, well, I'm filing them too. And they both filed them. Mom is now audited. Dad is audited. But when dad puts in his he turned in his information, he turned in to show the support, he turned in to show the bills, he turned in to show the medical, the daycare, the payments, and all of that he kept records of. The IRS gave him the earned income credit, and now mom has to pay back the money that she got. So you have to keep that in mind. That it's not like it used to be. Oh, well, they my kids, so I automatically get to file them, because guess what? They're his kids too. So if you're audited and they ask you to prove that, you have to prove how you paid over 6 months of support for that kid. It doesn't matter that they have your last name. It doesn't matter that you're on the birth certificate. That just tells them that they're related to you. That doesn't prove the support. That doesn't prove the head of household. That doesn't prove that stuff. So you still have to do that. So y'all just keep that in mind now when you're filing these dependents. They don't care how many times before you filed them. If they want to audit you, which now they're auditing way more. If they want to audit you, they're going to audit you. They don't care, that you filed them before. So please keep that in mind. When you get an audit letter, when you get something from the IRS, if you did not take advantage of audit protection, then that, if you need to consult with me, or you need help from me, or you need me to do something and paperwork and do this and do that, that's an additional charge, because it's a lot of time and it's not included in your tax preparation. It's just not. So I suggest everybody take advantage of audit protection. Let's see if I got comments. Okay, so back to what I was saying about the W-4. I'm gonna post the link for the video and the walkthrough of how I'm explaining it line by line. It's pretty self-explanatory. It's very clear on how I said fill out, who fills out what, income wise, how much you make during the year, what you should file, what you should deduct at your taxes. All of that is on there. If after looking at it you still have some questions, or you're still not sure, or you need further explanation on it, you can feel free to schedule a consultation and we can go over it. I'm going to be getting on here more in the off season, going over things to have you prepared. Please, clients with businesses, start getting your business information together. This is June. We're halfway through the year, so go ahead for the first 6 months. Make sure your business income and expenses are together. Make sure you're logging everything correctly. If you, like I said, if you don't know bookkeeping, if you don't know how to do it, solicit someone's services. Even if you don't want me to do it, there's plenty of bookkeepers out there that can do it for you. But ideally, come to Who Does Your Taxes, or go to Who Does Your Taxes, because everybody in this group is not a TaxTyme client, and you don't have to be. But just make sure your bookkeeping is in order. Small business owners, businesses, TaxTyme offers bookkeeping. We offer payroll services. We offer business consultations. We offer that. So if you need those services, go on the schedule, make an appointment, get a consultation, and one-stop shop. Okay? So again, I'm going to post the link right after this, and it's going to stay in the group so you can go back to it at any time. But y'all just keep in mind, like the ones that raise your exemptions, you file like 12 and 13 and you only have 1 or 2 kids. Keep in mind, y'all, that they're gonna get their money during the year. They're on to that. They know what you're doing now. So when I do your taxes and I notice this is a big amount, it's not letting me reduce it. That's because they know that is the amount of taxes that you pretty much gypped them out of during the year, and it's there. It's nowhere for me to work around it. It's there. It's already inserted in there to pay back that money. So having a business does help, but it's not necessarily all the time going to wipe out the whole amount. You may be still responsible to pay some of it. So just keep that in mind. And like I said, there's still wiggle room. If you get bonuses 2 times a month and you don't want that tax, let's just keep it real. That happens. There's still wiggle room if you're paying your taxes correctly the rest of the time. And I go over that also in the video as well. Okay? So y'all have a great day. Thank you for listening. And I'm about to post the Zoom link now.